If your next shipment is damaged or lost at sea, do you know who's financially responsible? Or if one of your imported products causes harm here in the US, are you confident that your insurance will respond? Or are you left exposed? In the next few minutes, I'll walk through the real coverage gaps importers face and how importer insurance closes them. And the best part is you don't have to start from scratch. With a simple process, you can move from uncertainty to confidence in your protection. Hi, I'm Coyle. For over 40 years, I've been helping business owners navigate the complex world of commercial insurance. And I've seen every problem, every pitfall, and every costly mistake you can imagine. Here I share the insider strategies and real-world solutions that protect your business and help save you money. If you're dealing with a specific insurance challenge right now, reach out and let's connect. I'll give you the straight talk, no BS, just straight talk from someone who's been in the trenches for a long time. All right, let's dig in. Importing is an exciting and profitable business, but it's also risky. You're dealing with international suppliers, freight forwarders, customs, and customer expectations all at once. Most days, insurance is the last thing you want to think about. That is, until a claim hits. The number one pain point I hear from importers is, I don't know what I need or where to turn for the right coverage. A lot of that stems from the fact that standard business policies don't cover the unique risks that importers face, and that leaves dangerous blind spots for you. Here are just a few examples. Many importers assume that the foreign exporter insures the goods in transit. In reality, they rarely do. That means if your container full of inventory is damaged, goes overboard, or is stolen, the loss is yours. The next one is that foreign manufacturers' liability policies don't cover product liability on goods imported to the US. If a defect causes harm, your business, not the overseas supplier, gets sued in US courts. And finally, cash flow risks. If a supplier defaults or a customer can't pay, trade credit losses can cripple your balance sheet. The stakes are high. One uninsured cargo loss can wipe out a year's worth of profit. One liability claim can put your entire company at risk. And when gaps show up, they don't just drain money. They shake your credibility with customers, lenders, and partners. Here's the key. Importer insurance isn't about shopping for cheaper quotes. It's about designing coverage that matches how your business actually operates. At the Coyle Group, we follow what I call the strategic risk process. It's 3 simple steps. 1 is discovery. We dig into how you import, ship, and sell. 2 is gap review. We compare your current coverage to real-world exposures. And 3 is right sizing. We design a program that protects you without unnecessary costs. An importer insurance program typically includes cargo insurance, which is also called marine insurance, to protect the goods from your supplier to your warehouse and while they're stored in your warehouse. General and product liability insurance to handle lawsuits from injuries or damages caused by imported goods. Product recall insurance to protect you from costly recalls when a product is suspected of being faulty or dangerous. Trade credit insurance to safeguard cash flow when your manufacturing partner defaults. And workers' comp and cyber coverage to protect your team and your data. Here's a real-world example. A mid-sized importer brought in children's toys from Asia. A shipment contained lead paint on it. When a child was hospitalized, the family sued the importer for $2.5 million. The overseas supplier had no US presence and no insurance. Fortunately, the importer had product liability through their importer program. The insurer covered the defense and settlement, saving the company from bankruptcy. If you're concerned about potential gaps in your coverage, or you're just not sure that your broker has your back, then it's time for a conversation. Before guessing at your renewal, you need an expert broker to take a deep dive into what you have and what you need. Whether that's me or someone else, this is critical to give you the peace of mind you need to know you're protected so you can focus on growing your business instead of worrying or wondering about what could go wrong. You need clarity and confidence. Here's something you can do right now. If you're buying cargo insurance from your freight forwarder, pull out your most recent certificate of insurance from them and look at the coverage limits. If you see any reference to weight-based limits, you've got a problem. In most of these freight forwarder policies, you'll see limits based on a dollar value per pound of goods shipped. Next, look at what perils you're insured against. Often, these policies have a very narrow scope, which also puts you at risk. And finally, check if the policy includes or excludes something called general average. If it's excluded, you could face significant out-of-pocket expenses even if your cargo isn't damaged. The bottom line is that in the past, you may have needed to go to the cheapest or easiest route. But if you're an established importer, now is the time to upgrade your protection. So what's next? Schedule a quick, no pressure call with me. Tell me what's on your mind, and I'll point out where I'd focus or I'll confirm you're in good shape. There's no sales game, no pressure, just straight advice from someone who's been guiding importers for more than 40 years. You don't have to wonder anymore. With importer insurance designed around your business, you can move from chaos to clarity and from guessing to knowing. Let's connect and make sure you're truly protected.